Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Monday, February 3rd, 5:34 p.m. Eastern Time. Coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup Daily Market Insight video. Market state, we're in an uptrend. Pressure a little bit today after a gap down on Trump tariffs. That mitigated itself somewhat during the session earlier in the morning session as Mexico relented, and then after hours, Canada relented also, and we're bouncing after hours on that news. So this downgrade on the short term, the yellow sub arrow, may just be a one. This is as of the close of today, not what's going on after hours. Uh, which what I'm basically saying is that four of the indexes broke their 21-day moving average, some by more than others. We'll check it out as we go through the charts. Mid caps also pierced their 50-day moving average to join small caps below that level. So still, we want multiple closes below before we downgrade the arrow. So that may or may not happen tomorrow from a short-term perspective. Medium term, if the S&P and Nasdaq 100 reverse and continue their weakness, that may slide to neutral as well. Long term, and the market never gets into serious trouble as long as we stay above the 200-day moving average on the indexes. We still got the green arrow there. Leaders, much different from today's gap down than the gap down last Monday. Last Monday was on DeepSeek and throwing a big wrench into the business cases for AI hardware companies. Today, leaders acted just fine. We're keeping the yellow arrow on there as there's really a lot of crosswinds going on the market. So, what happened today? Tariff gap down, but finishing well off the lows. And as I said, leaders acted fine. We do need more info to see how the overnight, what we're looking at is a small gap up now, about 0.4% maybe. See if that sticks and how we close tomorrow and see if there's any more. See how the market reacts to anything else that comes out of the White House is the bottom line. So here are the numbers: a 21 over 21, green, much unlike the rest of the numbers down here, but 14 up, four neutral, three down, up an average of 1%. The big eight split on the day, but down an average of 1.6%, led to the downside by Apple down 3.4% and Tesla down 5.2%. The RG8, sorry, growth ETF composite, seven of the eight down. The FFTY, which is the one we pay most attention to, that's the IBD 50, that was barely positive, but the others drug this average down by about 1%. S&P 500 down 0.76%, equal weight, slightly better. We'll take a look at the rest of these indexes when we go through the charts. Global 60/40 down 0.4. Our flagship GROTECTION portfolio down 0.46%. The leaders that we hold, holding up okay, although we did get stopped on a couple of things early. Always a battle to obey your stops versus give it room. We call them stops, but they're really alerts telling us that our risk parameters have been met, and then we monitor the action and decide whether or not to sell it. It's not hard stops that we put in the market. So let's start off things here with the S&P 500, and we'll go to a 5-minute chart so you can see the action. The gap down 1.6% and faded as the day went along until 10:20. This big up bar was when it was announced that we've delayed the tariffs by 30 days because Mexico agreed to move 10,000 troops to secure the border. And then we rallied off of that for the rest of the morning, formed a little base, tried to break out of that base, but then faded a bit into the close. That fade put us just below the 21-day moving average and right on the 50-day moving average. You can see how close together they are there, and the 21 days basically flat. So what are we looking for? Basically, let's go to a 60-minute chart. This is pretty easy to see if I can draw lines here. We're in a 10-day consolidation here. That's not the line that I want to draw. Let me try to draw it a little bit better than that. We're basically in a 10-day consolidation here and here. And 1, 2, 3, 4, 5, gap down, hold at 6, 7, 8, 9, get to the top of the range on 10 and fade. This is actually 11. Is it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? Yes, it is 11 days. 11-day consolidation where we undercut today and got back above it. You could technically include this little 2-day in here, but the clear break above and above the 21-day moving average was this gap up on this day here. You can see it when you go back here. It's really this day. So that's where we are after hours. Let's bring up the SPY and get a quote. Up 0.5% right now. So at 601, so that'll bring us right into the basically flat 8-day moving average and above the 21-day. See if it holds. Long time between now and tomorrow's close. NASDAQ 100 up 0.78 after hours. You can see it broke the 21, rallied up, could not get through the 21, closed basically right on the 50-day, very similar to what the S&P was doing. Let's go to the equal weight S&P very quickly. The 21 is below the 50-day here, fighting to get back up through it. So we're below both of those. But again, see how we closed at the top of the range today, well off the lows. Let's go to the strongest of the indexes. This is the Dow, just bounced right off of its 21-day moving average there. Let's go to the the S&P 400 mid cap. Tight consolidation for 2 weeks, broke below it today, but again, near the top of the range. See if this can get above those moving averages in tomorrow's session. And the Russell gapping down below that consolidation, unable to get above the 50-day moving average last week. Gapping down again, closed near the top of the range, but below the 21-day at the close today. All right, those are the major indexes. Let's go to the VIX. The VIX popped with the uncertainty on the tariffs. It ended up 13% on the day at 1862. Let's go to the dollar. Dollar was strong because of the tariffs. One thing that did happen that doesn't normally happen, however, relative to the dollar. And you can see how the dollar faded as the day went along when Mexico relented. It's probably down more after hours with Canada. But let's go to precious metals. First of all, we're going to stop talking about silver in this inter-asset correlation. It really isn't relevant in these markets, but gold still is. Here's gold. Dollar down, gold didn't care. Up another 0.5%, making new all-time highs. And GDX up 1.5%, faded a bit from its highs. We're in Nugget. This is the leverage version of it. Bitcoin had a massive gap down, but recovered both the 50-day and the 21-day moving average. Excellent action here by Bitcoin. Just really came down to this bottom of this 3-week consolidation and bounced nicely. So good to see that supported. On to bonds. Bonds were initially a fear trade, bid higher early, then faded. BND barely higher. TLT up 0.46%. Yields initially gapped down with price gapping up, but closed near the top of the range. There you can see the 10-year down, or sorry, the 30-year down, the 10-year. That is the 10-year. Let's look at the 30-year. Same setup, basically. All right, so that's our inter-asset correlation. Let's go to the tail of the tape. The news gap down on tariffs, bounce as Mexico relents, and Canada also after hours. So the keys coming into today, S&P against that 6,000 to 6,100 range, closed below both of them, back above 6,000 after hours. NASDAQ basically right on its 50-day, Russell versus the 50-day gap below. This is actually an 11-day consolidation. So keep eyes on today's lows and the highs of last week to see if we can break above, to see if we get less volatility causing actions out of the White House. First close below the 8-day moving average and below the 20-day. The slopes of both of those are basically flat. Expectations neutral to positive with the after hours bounce. As far as sector goes, gold and silver and gold and gold stocks outperforming. And as far as the spider sector goes, energies, basics, XLC is communication, P is staples, U utilities, V healthcare. They were up or slightly up on the day. Semiconductors, ITB lagged. Apparently, we import quite a lot of timber from Canada. That's why builders were down. Banks, transports, retail weak as well. And the worst of the sectors was XLK and XLY, two of the tech sectors. Uh, Volatility adjusted beta 1.18 and to the downside 3.93%. That's our Revere estimated balance at risk because early in the session we sold Tesla, ONON, and GEV as we got stopped out. In the afternoon, when we for a minute regained and attempted a breakout, we added some SSO back to offset that beta that was reduced. We'll take a look at these charts where we got stopped out on, but the bottom line on the day, big gap down on tariffs, but closed well off the lows, and the leaders were just fine, up more after hours. Tuesday's keys, S&P against the 21 and the 50-day, same with the NASDAQ, 21 and the 50-day, Russell against the 21-day, and Palantir is up over 20% after hours. We had a position in this. We added to it after hours as well. Is it going to be a monster power earnings gap? We'll report on that in tomorrow's video. Let's get to the charts. First of all, what we got stopped out on Tesla, gap down there. We've been shaken on this. I haven't traded it well at all, really, because it's not obeying technical levels. Trades a lot on emotion. Up 1.5% after hours, but this is a clear break of last week's lows. We were stopped on that early. ON had the ugly gap down. In sympathy with Deckers, and then another gap down today. It did finish nicely off the highs, but when your stop is hit, your stop is hit. The strength came in mostly in the afternoon. It was languishing under the 50-day when we got stopped out. It's all part of the process. We're not going to be right. In fact, we're right less than half the time, but it's the winners, the gains from the winners more than offset the small losses from the losers. GE Vernova gap down on this one as well, held the 50-day, but our stop was below the 21. So those three we got stopped on. Let's go through the 21 over 21 list for this week. We'll start off with what we own in here, and then we will complete the rest of it. Reddit continues to act like a champ, just bouncing at the 8-day moving average. Bros touched that 60 level again and closed nicely positive near all-time highs. Robinhood undercut, reclaimed the 8. CEG undercut and reclaimed the 21 and the 8. Snow undercut and reclaimed the 8. Palantir, here we are, up 23% as of right now. We added after hours at like 96 and 98-ish. Big volume after hours on this one. This is an all-time high. They beat and raised both on earnings and sales. And basically anybody that owns Palantir right now or owned it coming into after hours is at a gain. And that's very powerful. Gap up to all-time highs out of this somewhat V-shaped base, but really it looks like just a big inverse cup and inverse head and shoulders, and over breaking through that Livermore 100 level. So good for the portfolio tomorrow. Okay, that's everything that we own. Those are the six that we own. In addition to, we own Bitcoin, gold, and gold stocks, the ETFs. And those are the six stocks that we own, plus index ETFs. Now, here's the rest of the 2021 that we don't own. EQT, looking good. This is one that got hit with the gap down last week, as it is data center centric, but continuing to plug higher after that gap down. Cyber looked fine. Twilio, we want to sneak our way into this one. It bounced at the 8 EMA today. Great action after its not earnings gap up, but they raised guidance. Nobody's selling it. AEM We're in Nugget, but this is representative of the best of the gold stocks. Dash bounced at the 8 EMA today. Got our eye on getting into this one as well. Also app up 2%, bounced at the 21. HWM. We also could have RTX on here. Went back and forth as to which one, but AE. Helmet was on last week. RTX looks great too. Um, Show Helmet one more time. More going sideways, but the relative strength is just fine. TKO undercut and reclaimed the 8 EMA today. Interactive Brokers undercut and reclaimed the 8. Zillow undercut and reclaimed the 8. Didn't seem to care about the action in the home builders. SE undercut and reclaimed the 8. And Celestica, uh, great action, big volume since it announced earnings after initially being just bludgeoned last Monday on the AI data center DeepSeek shakeout, but this is one of the leaders of the components for data centers. Kava, got our eye on this one since it reclaimed the 21, former big leader, supported at the 40-week. Team undercut the 300 level, but reclaimed it, acting well since its earnings gap up. And HIMS busted out of a cup base and made a higher high today. And is that it? That is it. That's the 21 over 21 for this week. And that's going to wrap it. As always, I'd like to hear from you. The email's don@revereasset.com. If you're interested in becoming a client, email my partner, Dan Stewart. Dan at revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. Our flagship portfolio is named GROTECTION because it's designed to grow assets during uptrends, protect them during pullbacks. Sometimes those pullbacks turn into full-fledged bear markets, such as 2022 and COVID. We dodged both of those, losing significantly less than the market, keeping our powder dry for when the market rights itself. That's how we do things here. We also have a more aggressive version of GROTECTION called TurboTection, run by Ted and Connor. We'll start working the stats on that into our nightly reports as well. And with that, I will end it for Monday, February 3rd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.